Hey there, this is Nick from Income Digs, and we're publishing a video, a replay of a live workshop we just did, 3 bookkeeping secrets to scale your real estate investing business. In this workshop, I deliver tremendous value. A lot of you showed up live. I'm really glad you did. But for those of you who didn't, we've recorded the core concepts, those 3 bookkeeping secrets in this video, and we wanted to provide those to you. We have a really cool offer toward the end as well. So stick around, watch the entire thing. There's tons of value in this 30 minutes. And then at the end, we talk about our new course that we just released, Real Estate Accounting Bootcamp 3.0. We really want you to check it out. It's got more jam-packed information than ever before. But for now, enjoy this replay of 3 bookkeeping secrets to scale your real estate investing business. So a little secret here, QuickBooks was not made with real estate investors in mind, okay? We're a little bit different. So QuickBooks is amazing. It's the leading accounting software for small businesses here in North America, right? We know that. We've seen the commercials where it's like a flower shop or a bakery, and everybody's super happy because QuickBooks is amazing. And it is, but real estate is a little bit different. We own property. We have financing on that property. We amortize things. We depreciate things. We have escrow accounts. We capitalize. We renovate. We do all these extra things that are not in those commercials, right? QuickBooks has the potential to deal with it all, but we need to spend a little bit of time setting it up the right way. Okay, so once we acknowledge that, we can kind of keep an open mind to the fact that yes, QuickBooks is great, but out of the box, it's not going to be perfect for us. We need to understand, set it up correctly, and implement processes that are sustainable to us. So what would it feel like if, 1, our financials are neatly organized and accurate? We talked about that, the one reason, the one pain point a lot of you registered for this session today. We knew exactly what we owned and what we owed, right? What's the real estate I own? What do I owe on that? It's a really simple question. We can probably have it in our mind, but shouldn't our accounting books tell that story? Shouldn't it match our taxes? We want that. We need that within our accounting books. What if we could quickly understand project by project what we spent, right? Our P&L by project. Not a simple ask, but it shouldn't take us 40 hours of work to kind of tweet things out and pull things and pull it into a different reporting structure. We should be able to see that in real time. Our reports are easy to run, accessible in real time, right? QuickBooks has an amazing online app. Have you ever tried to use that online app if your data are not accurate, right? It's pretty much garbage, right? But what if we could get all those reports accurate and then we look at it on our phone or on our tablet and it actually is accurate? That's amazing, right? And that's what I want to get to with you today. So establishing and maintaining a structured accounting architecture and workflow, it means we're no longer guessing about the financial health of our business. Instead, we begin to see financial data in real time, and therefore we can make proactive decisions to grow and scale our business. Proactive decisions. I don't want us to wait until April or June, if we file an extension of the next year, to know how we did last year. Okay. I want you to be able to know in real time so that you can understand, should I invest more in long-term rental? Should I do more in short-term rental? Should I hire a property manager? Can I afford to hire a property manager? These are questions that we should be asking, and we should be looking at our books more frequently than once a year. And we can start to look at leading indicators as opposed to lagging indicators. That's what this is all about. Let's get into it. So I'm going to be teaching 3 bookkeeping secrets to scale your real estate investing business. As you probably know, you've probably seen some of my videos. I teach within QuickBooks. I'm going to do the exact same thing today. We're going to go one by one through these. If you have questions, I want you to ask me in the chat. I'm going to be checking in before I move on to the next, and I will answer them there. If I miss it, I'll pull it back in the Q&A, which we'll do after it all. All right, so let's get into it. The first fundamental secret of bookkeeping for real estate is a 2-dimensional chart of accounts. So what is our chart of accounts? Hopefully we kind of know what that is. It's a list of categories to which each transaction is assigned, right? So I have a transaction, I say repairs and maintenance. I have a transaction, I say property taxes, legal and professional, whatever. It's my categories, okay? It makes up what I call the architecture or the backbone of our accounting books. And it dictates the look and feel of our balance sheet and our P&L. So our P&L and our balance sheet are made up of all the accounts in our chart of accounts. QuickBooks is going to give us an initial list of accounts, and that's a good starting point, okay? That's fine, but it's our set of books. We need to make adjustments to that chart of accounts to make it work for our business. Where most get it wrong, one is we add too many accounts too quickly. Spelled too wrong there. So when we add too many accounts, here's what this looks like. We set up our banking feed. We have a million different transactions coming in, right? We get excited. We start categorizing. And then we start thinking like, oh, I don't have a category for legal. Let's add it. I don't have a category for repairs. Let's add it. Then later, I forgot that I added one for repairs. I had another one that's called repair and maintenance, right? So now I have like duplicates. And so we're adding too many accounts without thinking about how this is going to impact our P&L and our balance sheet. We also get into thinking that there's only one right way. Okay, so we hear from our CPA, or maybe hear from somebody like me, here's what your chart of accounts should look like. And you think, well, if Nick says it's got to be that way, then I have to make mine perfectly that way. Not necessarily the case. All of our businesses, especially in real estate, are a little bit different. So don't think just because your CPA told you it has to be that way, that makes sense for your business. It's your business, and you're going to use QuickBooks to run your business first and file taxes later, right? So just because the IRS has a certain form that it has to comply to, you can do your things your own way and then do some mapping later. And lastly, and this is the worst one, and this is the most detrimental to scaling, is we specify different accounts for each specific property. Okay, and I'm going to show you how that looks and why that is not a good way to set up our accounting books. So our solution is making our chart of accounts two-dimensional. So let's go to QuickBooks and check it out. So within QuickBooks, we look at our chart of accounts. This is an example of, kind of a common way that we see it. So what I'm going to do is I'm going to add two properties to my books here. Okay, 122 Buffalo and 264 Union. I'm going to purchase these properties. And what we often see, and this is not the right way to do it, is, okay, I'm about to purchase that property. Let me add it as an account, and I'll add some sub-accounts below it. Building, land, closing costs. Maybe you would even add CapEx. Maybe you would add furniture, something like that. Okay, so that might be a way you set it up. And I'm going to demonstrate how we can record that transaction in this way. So to do this, I'm going to go to a balance sheet all the way back to 2018, just so it's completely blank. Okay, so completely blank balance sheet. This business hasn't done anything yet. So what I'm going to do is I'm going to add those two properties to my books with a really simple purchase journal entry. Okay, so I'm going to make this as of 2018, so it shows up on my 2018 balance sheet. So let's purchase 122 Buffalo Street. So I can purchase, and I'm going to separate out my purchase in land, building, and closing costs. Now, if you haven't seen our videos on that, we have plenty of that on YouTube. I'm not going to get into those details now. I'm just going to do a really simple transaction where I'm going to say, I'm buying this property for, let's say it's like worth $150,000. And so I might split up the land, 50,000. Building is 100,000. And maybe, not a million. And maybe I have about 5,500 in closing costs. Okay. And then maybe everything's great and I close on this property with a really simple mortgage. Okay. Now we know that no purchase is that simple. I understand that. But just to demonstrate, we're going to say that these are our costs to buy the property and then we got 100% mortgage on everything. Everything's nice and neat. Let's do the exact same thing with 264 Union. That's another property. Okay. We'll put these on the exact same journal entry. So I'm going to pull up my land, building, my closing costs. All right, let's say this one's a little bit more expensive. 225, and let's go with 7,500. And again, just like I did for 122, I've got a mortgage for that as well. Nice and neat. Okay, so I can save and close this transaction and have my balance sheet populate. And initially, this actually looks fine, okay? What I see here is property that I own. Here's my 122 Buffalo Street. I can kind of collapse this and see the total. That looks nice. Same thing with 264 Union. I have my loans down here. Okay, fine. What does this show us, though? We have one transaction in the set of books, and we're already using 8 lines on our balance sheet, okay? One transaction, 8 lines on our balance sheet. I haven't yet even done anything with bank accounts, other assets like escrow accounts, equipment, trucks, vehicles. I don't have any other lines of credit or hard money loans. I don't have any equity accounts or credit cards, right? So I'm, of course, going to have those items in a regular business, right? I'm going to have all that. And so we can see that our balance sheet is going to get huge, okay? And this is 2 properties. And with 2 properties, you can see I have 8 lines. So we have 4 per property. Every time I buy a new property, I'm going to need to go to my chart of accounts and add no less than 4 accounts, probably more, right? Because we actually would have a CapEx, okay? And if that's the case, my balance sheet is going to get gigantic. And yes, Marlon, in this example, I'm kind of assuming buy and hold. That's why I'm putting it on my balance sheet, but it applies to flipping too, okay? So Marlon's probably asking like, all right, we're putting it on the balance sheet as opposed to the P&L. I'm going to show you why, no matter what, P&L or balance sheet, we still need to have a 2-dimensional chart of accounts, okay? So The solution here, right now, everything's going linear, up and down, right? We need to go across, and that's where the two dimensions come in. We need to add an additional attribute to our transaction to indicate what the property is, okay? So that solution is we're going to use either class or customer to differentiate our projects. Now, I'm going to demonstrate with class. Customer works pretty much the same exact way. Class you can only use in QuickBooks Online Plus and beyond, but customer will work, again, pretty much the exact same way. So what I'm going to do is I'm going to turn on class tracking. You go to Accountant Settings. I'm going to go to Advanced. And right here, Track Classes, I'm going to turn that on. And I'm going to say, warn me when a transaction isn't assigned a class. And this is essential here. 1 to each row of the transaction. Save that and click Done. Now, I've already established some of these classes. I'll show you where those exist. I'm going to go to All Lists. I'm going to go to Classes. And they're showed up here. So you can see that they're properties, okay? That's kind of step 1. Step 2 is in our chart of accounts, we need to make those accounts generic, okay? So instead of 122 Buffalo Street, building, land, closing costs, etc., we're going to be more generic. We're just going to say land, building, closing costs, capex, etc., okay? Generic. Notice that the address is not included at all. So with that in mind, we've done our prep. Let's go back to that exact same transaction and let's make this two-dimensional. I'm going to drill down into this so that I can grab that journal entry and edit it. So here I'm in that exact same journal entry. What I'm going to do, notice that class now shows up, okay? So now I'm going to make this land, not 122 Buffalo Street land, just land. I'm going to go to buildings. I'm going to do closing costs. Mortgage, I could do the exact same thing for the mortgage too. I can go conventional loans, generic, right? And now here, I'm going to indicate the class. Same thing with 264 Union. Make it generic, just land, just building, just closing costs, and conventional loans, okay? Indicate the class over here. Again, if you're using customer, you're going to go in the name column, okay? Pros and cons to each. We have some videos on that, but I'm not going to get into that right now. What we're really looking for is the two-dimensional aspect of this. All right, and I'm going to go back to the summary report. I see the questions coming in too. I will answer those. All right, so now look at my balance sheet. So I have land, building, closing costs, generic, right? And conventional loans down here. So you can see that we've gone from 8 lines to 4, okay? And then this last piece of this is, and you're probably like, how do we see it by property? That's the two-dimensional aspect of it. We're going to display columns by classes, run that report, and now I have the generic list on the left, and then I have my columns across the top. There's 122 Buffalo Street, land, building, closing costs, 264 Union's the exact same, conventional loans, etc., right? This is essential. We need to grow in 2 directions as we grow. Right now, every single time I buy a new property, what do I have to do? Add a class, and that's it. I don't have to go and add accounts, okay? I don't have to grow my balance sheet this way. It's going to grow this way, all right? This is essential. Now, that's just my balance sheet. Profit and loss, or if you're doing flips, same kind of thing. You don't want to have a 123 Main Street sales price, 256 Maple sales price. We need to have sales price, and then we go across with our properties, okay? So let me see if I have an example of that. On the P&L, profit and loss by class, same kind of thing. Look how generic these are, right? Interest income, rental income. It really pains me when I look at a set of books and it says, 123 Main Street rental income, 456 Maple rental income. It just grows too much, right? It's almost impossible. All right, let me look at these questions real quick. Okay, so let me answer Lena first. So how can you correct if you had it set up as one-dimensional going back several years? Okay, so Lena has it set up with a bunch of, buy property stuff. You can fix that with a journal entry, okay? And the way that you would do that is, let's say, now this is, it'll be kind of an effort, but what you have to do is you have to look at the balance of your books in like whatever the period was before you make the switch. So let's say that you're currently operating that way. Maybe you want to make the switch as of 1/1/2024. If that's the case, you can do a journal entry as of 12/31/2023 and just move everything over. So if you have that 122 Buffalo Street building, whatever the value of that is, you want to get it to 0. So like, let's say it's $100,000. Let's bring it to 0 by crediting it like that. And then you're going to go right here. You're going to do buildings, 100,000 and put in the class. This is how you correct it. So you need to get a snapshot the day before you make the change to zero out the old way and populate the new way. Once you do that, you can go back to all those accounts and deactivate. You can do that all with one journal entry. All right, I'm just going to look at Lake's question here. Okay, yeah, so, okay, a bunch of different CapEx stuff. Okay. So what you do with that, similar to what we're talking about with being generic, and actually probably the next tip is going to help you, Lake. What you need to do is make use of projects and products and services. But so like what you'd want to do on your balance sheet is keep it really generic with your CapEx, all in like one account. And then when you drill down into it, you can differentiate between those different little projects to understand, how much to depreciate in what years. Let me get into the products and services, and then we can maybe talk about that later. Okay, so two-dimensional chart of accounts, super essential, huge foundational piece that you would need to do to kind of get on the right track. Let's go into the next one, and I think we can talk about Lake's question a little bit further. So products and services. Now, this is one of the most underutilized features within QuickBooks Online. I wasn't using it at all until I started using Buildertrend. Not that you need to use Buildertrend, but that like kind of turned me on to it. And let's talk about what it is. So if we leverage products and service, we can augment our reporting and we can add additional detail without blowing up our reports. So it adds an additional dimension to QBO reporting. And I find it's the optimal link to external software. That's what I was talking about with Buildertrend, and also with external reporting. So what we're doing is we're taking the categories by which we budget. Think about like roofing, electrical, plumbing, right? We budget that way. We're bringing those categories into QuickBooks without blowing up our P&L or our balance sheet. This historical data obviously makes us more accurate for future projects. So why aren't categories enough? Why don't we just use chart of accounts? Okay, well, categories is our chart of accounts. We can't possibly, well, we can, but it gets really ugly if we list all these rehab categories on our P&L. I'm going to show you what that looks like. It's really not helpful to us as business owners, as decision makers, to on a P&L see how much I spent on roofing. I want to be able to drill down and get that detailed information, but I shouldn't see that on a high-level report. And we also don't want to continuously change our chart of accounts. So if we have roofing and we have drywall as our chart of accounts, we're using a ton of accounts, potentially like 100. We have limits on how many we can use, and we don't want to continuously change that if our business changes. Maybe we're starting to do like bigger projects and we're adding to it, and we have to go to our chart of accounts to add and edit those. We don't want to be doing that. So here's how products and services work. We're going to turn on what's called the items table. We're going to add a list of products and services. Now, it's called products and services in QuickBooks Online. Also think of those as like cost codes, categories. We're going to map those products and services to a very specific chart of accounts category within our P&L or our balance sheet. And then we're going to use items instead of categories when we're adding expenses. Let's see this in action. Now, before I show you exactly how to make the fix, let me demonstrate kind of what it looks like when you add all these accounts within your P&L. Okay, so something like this, right? So like if I, in my chart of accounts, had a thing called cost codes and I just started adding all these rehab categories, right? That's what this would look like. And I've added like 20 here to demonstrate this, okay? And you can see like, okay, here's my P&L and I'm just scrolling, right? Now, again, I've only added 20. Some businesses might have like 100. And it's just really difficult to manage that and to see that. Of course, I can collapse it. Yeah, it's not that big of a deal, but there's a better way, okay? So let me go over to this set of books. And when we talk about cost codes and rehab categories, what I'm talking about is like when we're about to do a project, we always do some kind of budgeting, right? We have some kind of list of categories and we say like, all right, how much am I going to spend on permits, on demo, rough plumbing, electrical? If we're flipping, we should be doing this for sure, right? If we're doing a rental property, we might be a little bit more vague on this, but we're still doing some kind of assessment of what we're going to spend. And we're using categories to do that, right? We're using some kind of cost coding to do exactly that, right? So we want to be able to bring that into QuickBooks. So let me do a transaction kind of like the old way, right? So I'm going to do an expense, okay? And again, from 2018. Here in category, I could put in like rehab costs, okay? I'm going to do rehab costs as a cost of goods sold. That's a little bit more if you're flipping. So if you're doing long-term rental, it'd probably go to your balance sheet. Again, we're not going to get into those details now. Let's say this is for like rough electric. Okay, and I can put my class here too, 122 Buffalo Street. Okay. I'm going to save that. If I go down, goes into my net income, and great, rehab costs, there it is. Now, I don't have that detail. I don't want you to put in here rough electric either. I go into here and I don't really have much more. I have it in the description, but I can't do any analysis on it. I can't do any pivoting on it, right? So what we're going to do is we're going to turn on the items table. Okay, so I'm going to go to my account settings. I'm going to go to expenses, and here I'm going to go show items table on expenses. I'm going to turn that on. Okay, that's the first step. We have to turn that on first. So now, once I've turned that on, if I go to create an expense, I have this additional section down here called the items detail. All right, so that was step one. I turned that on. Now you have to add your list of products and services as well. Okay, now you can import this. This should take some thinking on your part too, as far as what these categories should be. Okay, so I've got kind of a sample set here where I have category with subcategories below it. Here's maybe a way that you would start indicating your actual expenses. Okay, now I have some downloads. If you want to take mine, those are online, available to you for free. If you want to take those as a starting point, you can. When you create these, what you do is you tell QuickBooks, you do a mapping exercise and say, hey, when I purchase this, map it to flips, rehab costs. So this, you would probably do that if you were a flipping company. If you're doing more long-term stuff, you'd probably put it toward your balance sheet. You'd probably put it toward CapEx. Okay, so it depends on how you're set up. You can always move it back and forth, not a big deal. But I'm going to keep it to rehab for now. So now I can take that exact same expense that I have in that I use category for. I can drill down into this to edit it. Now, instead of using category up here, instead, why don't I go down here and do rough electric? And that's a category that I got. Excellent. Now in the description, I can be a little bit more, you know, I could say like wiring and rough-ins, whatever, okay? 5,500. Same thing, make sure we indicate the class. If you're doing project, you would do that too. It's not to the class yet. Okay, now I'm going to hit the garbage can on this one. So I'm going to save and close. Now this shouldn't change. This should not change my P&L. Look how it still maps to my rehab costs. It's still where it needs to be, but now when I drill down into it, I have the added ability to group by product or service, and I get to see how much I spent on electrical. This is one transaction, obviously nothing too special here, but when we have a bunch of transactions, okay, so like over here, I got a bunch of transactions. Some are put to construction materials, some are put to subcontractors. I can drill down into that entire 71,000, group by products and services, and I'm able to see how much I spent on all of these categories. My P&L stays nice and clean, subcontractors, construction materials, but I can drill down into a super detailed reporting of how much I'm spending on all of these different categories. And like I mentioned, this is the optimal connection between external software, such as Buildertrend. So Buildertrend, you're going to have cost codes. This is how the two would connect. You create the transaction in QuickBooks, it maps over, or you don't have Buildertrend, no big deal. You can throw it out to some kind of reporting tool where you have the same kind of categories and you can track the expenses versus a budget. You can do all that kind of cool stuff because we have the added level of detail. You have the high level, the P&L or the CapEx on your balance sheet, but we drill down to get more specifics. I'm going to take a second to look at some questions. Yeah, so Brandon is asking about wholesaling. Okay, so I think if you're doing wholesaling, you're probably doing a little bit more volume. And for that reason, customer probably makes a little bit more sense than class. But yes, still a two-dimensional chart of accounts for that. So Brandon, if you're wholesaling, you probably have, your wholesale fee is a revenue item. You probably have some costs associated with marketing. You have costs associated with legal. Okay, at every single transaction, income or expense, indicate that generic account and then put in customer, put what the project is. Again, that's going to give you a longer list of projects that you can do because you are limited on classes to about 40. So if you're doing wholesaling, you probably have a higher volume. Okay, so Mike, flips and buy and hold. Okay, sometimes CapEx and sometimes cost of goods sold. Excellent question from Mike. Okay, so Mike is asking the question, all right, I do some flipping, I do some long-term. How should I map my products and services? Should I map them all to rehab costs or should I put them to CapEx? My answer to that is you should probably pick the one you do more of, but in most cases, I found that putting it toward cost of goods sold is the best starting point. I don't like the idea of having a separate list for long-term rentals and for flips, because keeping them consistent is going to take forever and it's going to get confusing. Have one list, map them to one place, okay? And I probably recommend doing cost of goods sold. And then what I would do at the end of like every month, take a report, give me all the cost of goods sold, give me all the rehab costs for my long-term rental project, do a journal entry to move them over, okay? So you would credit the cost of goods sold, you debit your CapEx. It doesn't have to be every month, it could be every quarter, it could just be every year, to move them over. That seems to be the best mix, is to put them all to one place. That way you don't have two different lists you're managing, and then use a journal entry to move them over. A little bit advanced, but I could certainly help you with it if you need to do that. That's the way to do it for sure. Okay, so reconciling business accounts that have never been reconciled. Okay, Marlon, so that is a question I get asked a lot. So what you need to do sometimes with reconciling, and this isn't really specific to what we're talking about here, is sometimes you need to make use of opening balance equity and pretty much say like, hey, I got 7 years of transactions and there's like almost no way that all these accounts are going to line up. So you got to kind of pick a point in time. Maybe, again, if we're thinking about this year, maybe it's like the end of 2022 and say, I know as of the end of 2022, my balance was this. So I'm going to put an open balance equity in there and then do transactions and reconcile them through. You have to pick a point in time, really. And of course, it's case by case, depends how bad things are, but that's a good helper. Okay. Let me just keep going on to the next item here, just so we get through it all, and then we'll keep going with questions. Okay. So products and services, super underutilized. I encourage you to check it out. Last one here, multiple business entities, one QuickBooks Online subscription. This is like my secret weapon that is amazing. Now, this took me a long time to perfect, but it's awesome. Okay, so a lot of us as real estate investors, we have multiple entities, right? We have different holding companies, we have different entities that are doing things. And QuickBooks will tell you, you better buy a separate subscription for each, okay? Maybe that makes sense for you and your business, but I want you to be understanding that it's possible to have multiple entities in one subscription. So we can have one unified setup for all of our investment entities, gives us a portfolio-wide or individual entity reporting, and of course, we save some money on the QuickBooks Online subscriptions. Yes, we save money. More than that, though, the setup and the juxtaposing businesses next to each other is awesome. So here's how it works. We need QuickBooks Online Plus or above. We're going to use location tracking. Notice I did not suggest we use location to track properties or projects. Okay, I think class and customer are the way to go with that. Location tracking is great for business or entity specific tracking. Okay, so they call it locations. We can actually change the name to businesses. I'm going to show you that. We tag each transaction with a business. That allows us to have multiple entities in one set of books. Some considerations. This, I would say, is a little bit more of an advanced technique, okay? And remember that as far as QuickBooks is concerned, you only have one entity, okay? So that means that you have to think about branding, sales forms, communicating with tenants. You might be able to create some different sales forms that go out if it's this business versus the others, but something to keep in mind, payroll and 1099s. If you're using QuickBooks, you will only be able to issue those from the one entity, the one tax ID number that has a subscription. Okay. For me, that's not an issue in that I kind of have like one customer facing entity and then the rest are more holding companies. So I'm only running payroll through one. I'm only issuing 1099s through one, but it is something to keep in mind. If you are issuing 1099s through the other entities, you can still do it. You just can't use the QuickBooks way of doing it, which is kind of automated and a little bit faster. And we also cannot use the transfer transaction type because it doesn't give us the tag. And so it's a weird thing. They don't give it to us. All right. So let's see that in QuickBooks. All right, so let's go back to my report here. Balance sheet as of 2018, okay? Now, I don't have location tracking on yet. Let's turn it on. So I'm going to go to Account and Settings. I'm going to go to Advanced. Right next to Classes, I have Track Locations. I'm going to turn that on. And I'm going to change the label to Business, okay? Just like that, click Save, click Done. Just like with Classes, if I want to see my list that I have available to me, I can go to All Lists, Locations, and I've got two entities here. So this JMB Investments, that's kind of like my branded customer facing entity. And then I got a holding company below it. Okay. So what we can do, we've just turned on location tracking. Let's go to that exact journal entry that we recorded for that purchase. And let's add that additional attribute. So now location shows up here. That should change to business. It probably will in time. Okay, so here I'm going to say, what business bought this property? Okay, so this is going to be JMB Investments owns this property, okay? And I got that question coming through. I see that from Daisha, so I will answer that shortly. All right, 264 Union owns this one. So what I'm doing now is I have the property, now I'm just putting in the entity. Okay, let's save and close. And I'm going to do the exact same thing with that, that one single P&L transaction I have too. So just like on the journal entry, on these expenses, we also have location now shows up here. Okay, so this is for 122 Buffalo, so I'm going to put that in JMB Investments. All right, save and close. Now, if I look at my P&L, or let's look at the balance sheet. Okay, now not only can I separate by class, I showed you that, but now I can separate by businesses. Okay, so there's my separated by business. And you know, the common feedback I get is, hey, my accountant says I can't do that. Well, guess what? If the information is accurate, it shouldn't matter. Because you're paying the bill for QuickBooks Online. If it helps you in your business and you can deliver the reports that your accountant needs, then you're fine. And this is what I mean by delivering the reports your accountant needs. If I wanted to get just the balance sheet for 264 Union Holding, I can filter this by 264 Union Holding. Okay. Now that I filtered it, I don't need to display the columns. So let me go back to total only. And why don't I change the name of this? 264 Union Holding balance sheet. Okay. What don't they get here, right? They get everything they need. And so if I am able to deliver those reports, that's all good, right? And we get the benefit of one chart of accounts, one list of vendors, one set of saved reports. I can show a business by business next to each other type thing if I wanted to understand which businesses are performing. Okay, again, advanced technique. There are some pitfalls to think about. We have some YouTube videos on that. We talk about it in the course that we have as well. I'm going to answer these questions, then we'll see what else there is. So one of my entities has SBA loan balance sheet and PL. Yeah. Okay. So Daisha, what you need to do is you need to get your reports filtered. So the SBA is requiring that you give a balance sheet and a P&L, and they only care about the one business they have the loan for. So you need to get your reports filtered down to that business. Every single transaction needs to be tagged with the business. And then you should be able to filter down your balance sheet and your P&L, have it as a saved report that you're able to produce. Okay. How do you assess cash flow? The P&L will show profit, but does it account for principal payment? Great question, Robert. So there is a cash flow report. Okay. Mine was probably going to look really weird and ugly on the sample set, but statement of cash flows is where you can start. Okay. So what the statement of cash flow does, it takes the net income as your starting point, and then it takes in what they call like financing activity. Okay. So your principal would show up there. So the statement of cash flows is a good place to start. Now, QuickBooks has created this new cash flow planner as well. I talk about it in our end-to-end course, which I'm going to talk about in a second. This is cool as well. So this will take into account not only your P&L, but also the cash that goes into principal payments. And Dana is asking, can't separate a bank account by class. You're correct. I mean, you kind of can, but it doesn't look right. So I think, Dana, you're referring to, if I were to do a balance sheet, okay, my by class will have this not specified. That is true. By class, that's true. Okay, by business, you should be all set. That's why doing a balance sheet by class is useful for understanding the property information, but it's not, this doesn't make sense. QuickBooks is not sure where this money kind of came from. So by class, it doesn't show there. But by business, it does. And the reason for that is because by business is on both sides of the transaction, whereas class is only on one. Cool. Thank you, Robert. Appreciate that comment. All right. So that's the third one, is multiple entities. Now, this is just a start. It's not like you can just today be like, oh, I'm going to use multiple entities. I want you to watch my detailed YouTube video on it, or check out the course, which we're going to talk about in a second too. All right. Okay. So we start with these 3 simple steps, even though the last one was a little bit advanced, but we are on the path to streamlining our bookkeeping. These are like building blocks. They're foundational, in my opinion. Okay. I think that they're essential. When I work one-on-one with investors, these are the first few things I'm looking at. And most commonly, it's a one-dimensional chart of accounts. We're not using products and services. And then we might have a ton of different subscriptions for all the businesses we own. Okay. So I can teach you how to get there. All right. So obviously I'm doing a lot of teaching on YouTube. We were in this workshop and I hope you're getting a ton of value from that. We have a little bit more if you're interested. Hey there, thanks for watching. I hope you gained tremendous value from that workshop. We really appreciate those of you who showed up live and for those of you who watched the recording. And as we have on the screen here, Real Estate Accounting Bootcamp 3.0 is now live. It's the most comprehensive course we've ever put together. We have some amazing deals going on. Check out incomedigs.com/Reeb, R-E-A-B. We got the link in the description there as well. Amazing content within this course. It's the most we've ever included for the price, okay? And I'm going to be there right with you along the way within the community, within the Q&A sessions to help you get the most out of this. So if you're a real estate investor or a bookkeeper, I really encourage you to check out Real Estate Accounting Bootcamp 3.0. I can't wait to see you in the course.